Tron going public in the United States without an IPO, nearly $2 billion streaming back into crypto funds, and the Senate advancing real stablecoin regulation. Now, these are not just headlines, they're actual signals that cryptocurrency is moving into an entirely new league. But what do these moves actually mean for us as a small investor or someone who's just curious about cryptocurrency? So that is what I want to unpack today. And by the end of this video, you'll not only understand what exactly is happening, but also how to position yourself as a crypto investor as it crosses into more serious territory. So let's start with Tron. Tron was created by Justin Sun and has been making waves since it launched. Faster transactions, entertainment focus, lots of hype, and this week they announced a reverse merger with SRM Entertainment, aiming to go public in the United States without the traditional IPO process. Now, what is a reverse merger? Think of it as Tron sliding into the back door of a US stock market company. Instead of launching an IPO where regulators underwrite shares, banks manage PR, and you wait for it forever, they merge with a company that's already publicly traded and boom, they're public. So why does this matter? US investors can actually buy in with retirement accounts or retail platforms introducing new capital. And once public financials get audited, quarterly reports land in SEC filings, and it makes the project feel more legitimate. Also, for confidence sake, the public company badge eases a little bit of nervousness. So Bitcoin's institutional stamp is the gold standard. Now, Tron is aiming for a silver one, but it's important to keep perspective here because a reverse merger isn't a guarantee of success. It's a tool for visibility and trust and potential new capital. And for smaller investors like you and me, it's an early indicator that institutional pipes are opening up. Now, next up, I want to talk about the 1.9 billion weekly inflows into the crypto exchange traded funds and products, because that brings the total inflows to about 13.2 billion for this year. Now, that is big, especially when traditional markets are shaky. So why ETFs matter? Regulated access channels that people can invest in using regular apps and accounts means institutional involvement and perceived stability. And Bitcoin, it's been holding around 106 to 109K, especially with global economic noise. And Solana spiked 7% today, which tells us money is still actively choosing crypto. Now, for regular folks like us, this means crypto feels a little bit less like a wild roller coaster and more like a growing asset class. It smooths volatility and it might even reduce some emotional ups and downs. Now, finally, the Senate took huge steps by voting 68-30 to advance the Genius Act, which is a comprehensive stablecoin legislation. Now, stablecoins are digital dollars backed one-to-one by real money, essential for DeFi payments and savings. So the bill includes 100% reserves, fully audited oversight by the Fed, FDIC, and stronger consumer protection. So why is this important? Until now, stablecoins kind of felt like the Wild West. And this adds accountability, transparency, and trust. And it makes DeFi safer to use. It's a big deal for regular users like us because stablecoins are like the plumbing of the crypto world. And regulations make sure that no one's messing with the pipes, so to speak. So here's how we connect all the dots. Tron going public shows growing legitimacy, and institutional inflows reflect confidence and more money behind crypto. And stablecoin regulation brings real-world usability and safety together. So they're not just random developments. They're building a bridge from hype to infrastructure. So for those of us mid-investor, that means preparation is key. So we're not just chasing price spikes. We're positioning ahead of adoption. So here are 3 things that we can do right now. We can watch for more reverse mergers, and this is just the start, not the finish line. We can pay attention to fund inflows, stations like CoinShares, and this data can tell us if our money is moving in or out. We can track stablecoin regulation because it could be a new on-ramp for everyday transactions in crypto. So you don't need to be an institutional investor. You just need to use this information to guide where your focus and your research and capital and attention goes. So what stood out to you today? Tron going public, 1.9 in inflows, billion that is, or actual stablecoin rules? I'd love it if you would comment below. And if this video helped you make sense of some of the noise out there, please like and share and subscribe. I've also put together a checklist. It's free, the link is below, and it will help you identify legitimate crypto setups as this next wave builds. I'm Sarah, this is Prepare to Prosper. See you next time, and remember, slow, steady preparation beats fast hype every time.